Over 3 years ago, I first shared this chart suggesting we were close to a bear market bottom and we had another major move to go to complete Bitcoin's first complete cycle. And it's safe to say that has been playing out pretty much to perfection. But as soon as crypto broke back into new all-time highs almost 12 months ago, I kept it no secret that from that point moving forward, things are going to get increasingly difficult. So in this video, I will be discussing the macro cycle, Elliott wave, where I see the current position of the market and what is potentially around the corner. Before we do, a quick reminder that I'm not a financial advisor. Always do your own due diligence and research, and past results are not indicative of future performance. Now, to take a quick step back, I use Elliott wave to track market cycles, sentiment, structure, and give us a bit of an insight into what's more likely coming up in terms of waves, not necessarily times and prices, but what the market structure is likely going to do for trends both up and down. That is a very important distinction to make because I am not using this to predict dates and times. And like I shared with you guys over 3 years ago, it was more likely that we're close to a bear market bottom and we should be setting ourselves up for another macro bull market. That video was released in this period here, 2022, August to be specific, and that thesis for coming to the end of a bear market and beginning another bull market has been playing out quite nicely. But where does that leave us now? Now I'm going to jump between different charts to explain my thoughts here. This is the total market cap. This chart here is the BLX chart, but unfortunately, this chart here stopped giving us data back in around August or September of this year, so it doesn't have up-to-date data. So for that reason there, we have this with our complete history, we have the total market cap, and we've also got Bitcoin's Elliott wave, which I will go through as well in just a moment. Now, long-term viewers of the channel will know that once we broke back into new all-time highs at the end of last year, I made it very clear that technically speaking, the top of the bull market could come at any time because of the market structure. The market structure had completed a 5-wave count, which is what we need to see to complete an Elliott wave cycle. So as soon as that point comes about, things get increasingly difficult to pinpoint where we are in terms of market structure. I made that very clear at the time, and I have mentioned it many times before. But what I also shared with you guys was I didn't suspect the top of the cycle was in, despite us getting those 5 waves. There were many reasons for that, but the main one being time. Our time frames weren't up, which is a different type of analysis to this, and also how there was a high chance that Bitcoin would be acting like a commodity, which means we'd be seeing an extension within this 5th leg. So despite us getting the completion of a 5-wave cycle here to end a bull market, we had some other analysis to suggest that we'd be heading higher, and so far that too has been playing ball with high prices printing since that peak from December of last year. So my view I shared with you almost 12 months ago does remain to be true, and that anything from this point forward is going to be increasingly difficult, meaning managing risk tightly is extremely important, especially as many markets are getting really over the top, gold being a recent example, stocks still pushing to new highs, and essentially the everything bull market getting deeper and deeper into the end stages. So where does that leave crypto in terms of the overall cycle, market structure, and Elliott wave? Well, this thesis here has not been invalidated. There is still a chance that this could be taking place, but we still get a blow off top and a wave 5 extension. But the invalidation level I've been talking a lot about is if we start to see a breakdown beneath 3.5 trillion, followed by higher time frame closes and lower highs, does increase the chance for the cycle already being over where this thesis will not be playing out. That is only the earliest lead on a failed blow-off move thesis, whereas the higher time frame confirmation won't come until we see significantly lower prices breaking beneath previous cycle highs and previous major lows, which for the most part is relatively unusable from a practical point of view because price has to fall quite far to actually get that confirmation. That's why I always like to consider early leads, because often when we get those early leads, the higher time frame triggers will be met. So failure to see that take place means the more bullish scenario is still on the table, even though we did get that savage reversal just a couple of weeks ago. And if anything, that's actually a good sign once we can start to see price regain that previous peak at around 3.75 trillion. And the reason is we have a guideline of alternation in Elliott wave, which states if you see a sharp correction in a wave 2, then wave 4 is more likely going to be a sideways correction. So if we're thinking ahead into this thesis still playing out, there is a chance we've just seen a wave 2 of an impulsive wave which will continue higher. And that would look something like this. Now, this is the bullish Hopium, where all we've seen in this recent run up out of the April low is a substructure wave 1, which means we're within a wave 2 correction and we have a 3, 4, 5 to go before still seeing high prices within a higher time frame bull market. Now, I'm certainly not getting carried away with this thesis here, but the fact that we have not invalidated the wave 5 extension thesis yet does put this as a plausible scenario currently playing out. This would mean the cycle would be extending well into 2026, which also lines up with some other timeframes I've discussed previously on the channel, as well as other things going on in the broader economy. But should we start seeing those signs of failure I was talking about just before, then this will need to be reassessed because it would significantly reduce the chance of us seeing this higher time frame extension. An early lead that this thesis will be playing out for a substructure wave 3 of a wave 3 means we need to be seeing some trend changes above around $3.75 trillion. So I'll come back to this one in future videos. We have been getting closer and closer to the Elliott wave cycle ever since completing this 5-wave structure at the end of last year. And like I pointed out at the time, it does become increasingly difficult from this point forward, so managing risk is always the #1 priority. A big reason why I'm not getting too carried away with this is because, like I said before, we have technically completed a 5-wave structure for the bull market, and this is what it looks like for Bitcoin. This is the bear market bottom in 2022, and you can see the 5 waves I've drawn in yellow. We have our wave 1, our wave 2, wave 3, wave 4, and there is a chance we have completed the 5th and final wave for Bitcoin. This chart here goes into a fair bit more detail, and I've drawn up the substructures of each wave, because if we want a high probability count of working, we must be seeing the same breakdowns of our impulsive and corrective waves within each substructure wave. And I've gone into extra detail for our wave 5 in Bitcoin. You can see here we have our wave 1, 2, 3, 4, 5, where you can also see a breakdown of the substructures and the waves within waves, just further increasing the chance of this wave count being accurate. Now, before you tell me it's wrong because wave 3 is smaller than wave 1, the Elliott wave rules state that wave 3 does not have to be the longest wave, it just can't be the shortest wave. So on the one hand, we do not have invalidation of our wave 5 extension, but on the other hand, we have technically completed 5 waves, which means the peak of the bull market could already be in. So this is where confirmation is really important. We do not have any confirmation of the top being in, despite the market structure being complete, but if and when we start to see breakdowns from major levels followed by a higher time frame close and lower highs, if we happen to see a complacency bounce on lower volume but more hype, that will be the canary in the coal mine that things are going to come crashing down. So until that comes about, if it even comes about at all, this is a thesis I'm still following until proven otherwise. So I'll have more on this in upcoming videos, as the markets are a living and breathing thing. Nobody knows what happens on the blank side of the screen, but if we're diligent with our analysis, then we can stay one and sometimes a few steps ahead. Now, if you would like more from us in TIA, then you can get your hands on our free reports. We cover the economic cycle, altcoins, and Bitcoin, all completely free. So I'll leave a link in the description below where you can drop your details in so the next edition hits your inbox. But in terms of the markets and the macro market structure, that's all I've got for you in today's market update. Wishing you more health, wealth, and happiness, and until next time, I'll catch you then.